The Canadian dollar is trading at low levels not seen since 2020.
Yeah, bad news if you're trying to go cross-border shopping. CTV's Jeremy Sharon is live now with more on this. So, Jeremy, why is our buck sliding downward so much?
Yeah, look, there are a number of factors that play a role here, but two big things in particular. The first is diverging economic outlooks as well as decisions when it comes to interest rates. Both central banks, the Federal Reserve and the Bank of Canada, are moving in the same direction. Both are looking to stimulate their economies, but they're doing so at very different speeds. The Bank of Canada has now, for four straight times in a row, doesn't really make sense, but four consecutive times has cut its key interest rate, the latest being last week, half a percentage point cut. All of that in an effort to stimulate the economy. The Federal Reserve in September cut its key rate by a half a percentage point as well. The difference is the U.S. economy is reacting significantly better. The Canadian economy is not seeing the same kind of growth, the same kind of rebound. And so what is happening is we're seeing the Federal Reserve now considering no cut at its next update, whereas the Bank of Canada is widely expected to continue its cutting cycle. That widens the gap between the two interest rates, and that hurts the Canadian dollar. People are more likely to hold currency of a bank that has a higher interest rate. So that is a significant factor here. We've seen that gap grow to a gap we haven't seen in about 2 decades. The other big thing is political uncertainty on both sides of the border. We're just days away now from a U.S. election. A potential second Trump term is putting pressure on the Canadian dollar. The potential of tariffs that could be imposed and the impacts they could have on our economy here, that's playing a role here, as well as is political uncertainty here in Canada. We could be thrust into an election at any time. The Liberal government now has lost support of the Bloc Québécois, and that means they're solely relying on the NDP to keep them in power. So political uncertainty playing a key role here as well.
Okay, and Jeremy, what does this mean for Canadians, aside from not being able to hop over to Buffalo to buy what they want at the outlet stores for a fraction of the cost?
Yeah, exactly. I mean, look, if you're a business, there are a few different factors here. If you're a business that exports products, you're actually going to see a bit of a boost here. This will help you economically in the short term. If you're a business that relies on a lot of imported products, this is going to hurt you financially. It's going to cost more money to import those products. We could also see a few kind of other things here. This could boost certain sectors of the economy, like tourism, of course. We could see especially more Americans coming to visit Canada, where their dollar will take them much further. On the flip side, it means Canadians likely aren't going to be traveling abroad as much. It's going to cost you to travel, especially to the U.S. more. Specifically, you think of snowbirds. People are going to go spend some of their winter abroad, places like Florida, where we see a lot of people travel. It's going to cost you more money. So likely it means less Canadians traveling, perhaps more tourism, more Americans coming here. And then there are some kind of short-term impacts for businesses. Ultimately, it's not a good thing. The Canadian dollar being weak is not good. It's expected we'll continue to see kind of this trend for a little bit, and then we'll see the dollar bounce back likely next year is what experts are predicting.
Okay, CTV's Jeremy Sharon joining us live. Thank you, Jeremy. Happy Halloween, by the way.